Okay, this is a quick chat room update. We've got, we're just past, a few minutes past the 10 o'clock New York time release of Powell's statement, and you can see the initial reaction. We didn't get stopped out here. The stop, the stop was at 50. That was the call. So we're going to review for those of you who missed it. Again, the entry was on that 5 minute, the break of that 5 minute bar. Uh, this is a 5 minute chart, so let me go back over to the 30 minutes. So we had this bounce and this reversal here, and the entry was on the break of that 5 minute bar. So going back to, and then after it printed, so that gave us an entry of approximately, the high there was 68. I think the fill on my side was like 70 half, somewhere right around there, 70 half. And then the stop again, we had to go back over here to the low, which was 52. Sorry about that. I'm sorry, 50. The low was 51. So I put the stop just below that. That was the initial call. So the entry, again, getting in on the break of that 5 minute bar. 70 was the entry. 80, obviously, we're just using this as a price marker because that would normally be one of the first psychological levels that I trade to, but that's too close. That's like maybe 8, 9 pips with the spread. The actual uh, take profit level is going to be the double zero. So we haven't moved that. I haven't changed that. Um, Again, it's lining up again with a trade that we took a few days ago. I had to cut that trade off. I might end up doing the same thing, again with an entry of approximately 70 to a target of the double zero. If it stalls, again like it did here, I think this was a stall of, yeah, 98. If it does something very similar, I'll lock in profits and call that out here in the chat room as well. So be aware if you're not going to be in the chat room, but you're watching this update and it takes a couple of hours for it to reach that level. If it stalls just before the double zero, I'm going to lock in profits. I'm going to recommend, taking that trade and maybe even go flat at that point with this trade because we're looking at Friday. I don't want to hold on to a position through the weekend. I think it's likely that it's going to take out this double zero. I think that there's enough momentum here after this initial reversal. I did get a uh, one trade copier member said that they got stopped out, so it could have been maybe that their broker sort of widened the spread as it's dropping on a news, move like this. So there's nothing I can do to control that. It happens. It could be a broker. I think the low was 52. The low is 52 and 2/10. So it should not have stopped anybody out, but somebody did say that they got stopped out with that, with the stop placement of 50. So again, that would mean that their broker is widening the spread as it's approaching some of these areas to clear out maybe some stops. Anyway, back to the trade. This is again a bounce. So earlier in the chat room, we were looking at this continuation signal candle. That was one of the first things that I got questions with because it looked like a few hours prior to that, that white candle there that printed that hammer, it looked like it was that there was a chance that it could close bearish at that point and close below it. And I said that even if it does close, that candle closes below that support and prints a signal candle, if you look at the Bollinger Bands, they're coming together. They're coming together on this one, and there's a lot of divergence in the CCI indicator. So with those two primary indicators, I wouldn't even consider selling it even if it drops another 15, 16 pips. Well, from that low here at about 59 to a low there at about 50, it dropped, maybe 10 points or so. No big deal. At that point, again, I wasn't considering selling it, and it did not close below that support. And then a few hours later, it did. So at that point, the Bollinger Bands are starting to separate away from each other, but I still have all of this divergence that's developing here on the CCI indicator, which again would keep me away from trying to sell that. Looking at the larger time frames, it was pretty obvious that it was starting to form a low here, and it was likely to bounce. And then I just waited for the reversal candle, 30-minute bullish engulfing, waited for price to move up a little bit higher, and then of course getting in with a break of the 5 minute bar after, and this is exactly what I was doing in the chat room. So I was reviewing the setup here and uh, the bullish candle here, the engulfing candle, divergence, divergence with the candles that looked like they were taking out support but weren't really going anywhere, and then a break of that 5 minute bar here, the 5 minute chart, and then getting into the trade. So sometimes when I get a signal, um, this one, sometimes I get a stronger signal, right? Sometimes I get a bigger signal than some, the candle that we see here, and there could have been argued, it could have been argued that there was a second entry opportunity with this strong bullish candle. Either way, when I get a candle like that that confirms on a 30-minute or 1-hour chart, to pinpoint my entry, I'm going to be watching the 5-minute chart and wait for the candle, wait for price to break the high of the signal candle. It gives me better timing if I expect it to move relatively quick. This ended up taking another hour or so after the signal. This is a 30-minute chart. Sorry about that. There's the 1-hour chart. So this took a couple of hours later. And then when we see price moving up like this and then pulling back down, creating these wicks, it was retesting the level that it broke out of. But again, it wasn't a continuation sell signal candle. When I see candles like this pulling away and pulling away, very often it will indicate that the next few candles, once we get past whatever it is that we're waiting for, in this case, the statement from Powell, it's almost like it's pointing in the direction that it's going to end up moving into anyway. So there's really, that gives me more confirmation that this is likely to be a good trade. This spike here to the downside doesn't surprise me with the initial reaction and everybody sitting around waiting for this for the last, 3 trading sessions now. It doesn't surprise me that we would see some kind of a spike, but the 50 stop loss placement held, and it's okay at this point. So again, if your broker stopped you out there, I don't know what to say. It happens. It happens, and there's nothing I can do to control that. But as far as what we're doing here in the chat room, again, those who are trading the trade call, initial trade call with the stop of 50, this again, 80 is just the first marker, just to make sure we're trading in, it's moving in our direction. 70, 71 was the entry, and then here's the final target here. Now, if it takes out that 00, the next target would be the psychological level of 20, but we've got this resistance point here for the week at 12. So maybe, I'll lock in profits or, hold on to the trade and trail it a little bit higher. And then if I don't take profits here at the 00 because it's pushing through quickly, then obviously we're hands on. This is not like a set it and forget it trade target. So if it goes through that level, I'll let you know. I will announce it that I'm going to hold for a little bit more. And then maybe 9 here. There's R1 right here at 9. If it stalls, once again, when we talk about that stalling, the way it looks when it starts to stall, that's when we want to lock in profits. I mean, at that point, we would be up 30, 40 pips, and that's not a bad trade. From 70 to maybe 10, that's approximately 40 pips, or even the 00 is 30 pips. So, I'm comfortable with that if it stalls to lock in profits, even if on the next candle it continues to go up a little bit higher. So we're looking at 12 minutes after 10 New York time. So we've got a little bit more. I apologize I didn't catch this in the beginning because we've been talking about. So the questions in the chat room were, is this a continuation sell signal, and price is just retesting the level that it broke out of, because I talk about that a lot, or is it actually a reversal? So there were a few things. Again, the reason that I didn't really treat it as price retesting the level of support, and this is what we were talking about. This is a good learning lesson if you missed it in the chat room today. The reason I didn't treat it that way as looking at maybe price holding here and then coming back down was that initially on the breaks, on what appeared to be breaking down support here, that spike low and then that candle, it wasn't confirming anyway. It was obvious that it was starting to shift and turn around. So the other thing we were tracking was the dollar index. So look at the dollar index and you go back maybe 4, 5, 6 candles on the 1-hour time frame for the dollar index, and you can see exactly what I'm talking about. It was sort of lining up, indicating that this was likely to be some kind of a bounce at that point, because the dollar was dropping pretty steadily and continues to do so. So again, with this divergence here in the CCI, that's another pattern that I look for. You get that. This is almost like that T2 pattern. So you get that low, the pullback, and then the dip low in price, and then you can clearly see that divergence. And it sets up not only on the 1-hour chart, but it sets up on the 30-minute as well. So I'm looking at both. I want to make sure that I see that this setup and this pattern So this is a relatively small one. Um, that would normally be the T2 pattern. Normally, the take profit level is the high here, but very often it will exceed that. It's just the first level to lock in profits. But considering where we got in with the high there at approximately 73, what's the difference, right? From 70, 71 to 73, and then 80. These are all really too close, these targets, but they're indicators for me that things are moving and they're hitting these levels that I would expect them to hit if price is going to continue to rally higher for the day anyway. So here's our first, maybe our final target. Again, 1.1100. I'm going to pause this. I am going to be taking more questions in the chat room. I won't record the questions and the lessons in the chat room right now because I'm recording this trade just to show you how we're going to effectively manage this as it gets towards those targets. And but I am going to be calling out where I'm taking profits, where I'm locking in profits if it blows through that high, maybe in the next 30, 40 minutes. We'll have to wait and see. And then if it stalls, if it doesn't hit the 00, again, similar to what we did the other day, I believe that was yesterday, I might have to, consider taking 27 pips or 25 pips or 25, 24, something to that effect. So I'll let you know exactly how we're going to close that in the chat room, and then I'll try to catch this on this recording. Okay, live trade here on the Powell statement. The trade, obviously we got into it before, but so we have closed and officially shut down this trade at 30. So I'll show you a couple of reasons why and what was happening. There was 30. Again, I didn't know how far it was going to go. And as I mentioned, if it pushed through the 00, maybe maybe this level here, the R1, right around the 10, all we got to do is wait for the next candle, notice the pullback, measure how deep it goes, see where it stops, and then once it starts to move right back up and take out that high, then we're good. We don't want to give back any profit, so if it rolled back down to the 1100, we would have closed the trade. But once it takes off, obviously on a trade like this, maybe 1, 2, 3 candles, we're going to get probably 3 candles that are going to push. I would expect that this is probably going to go a little bit higher. But I'm done with the trade because we've got R2 right here at 36. And at this point, we've got in at 71 with a level on the other side of the 00 at 30. So that's a pretty healthy trade. That's approximately for 58, 57, 58 pips. Going back to the dollar though, and this is what we were looking at even earlier this morning. So originally earlier in the week, you remember, for those of you that, this is like a recap for those of you who are not in the chat room or maybe missed some of it earlier in the week, we had that A high, that B low, that range of consolidation. At one point, it looked like, maybe a continuation breakout trade to the downside. There was a signal yesterday, but no 3-pip entry. So that keeps us away from trying to short it. And then it reverses. It hasn't taken out the highs. And that's what we were looking at earlier this morning in the chat room to find confirmation as to where the dollar's likely to stop and this bounce right here on the euro dollar. So that's how we pieced this whole trade together. So again, I'm flat. I'm done with this trade. Some members in the chat room, I did mention it's probably going to go further. The next target would be 50. Sorry about that. Trying to put that marker in here. The next target would be 50. At psychological level. And it'll probably hit it, but I'm out. I'm flat with this trade. I'm flat on this pair. So trade copiers, I don't know what the hell. Some people said that they got stopped out. Other people said that they did not. Brokers moving price down to the 50. The stop was at 50. This is a low of 51, and that candle only went as low as on the statement for Powell after he released that statement, 52.2 here on forex.com. Each broker has a slightly different number there to a certain degree, but that was just a shitty thing for brokers to do sometimes when you've got a bunch of stops parked here like this. It doesn't surprise me, but again, you can go from one broker to the next if you find some variables here that just don't line up. Things, you get a low in a candle that just doesn't match up with maybe another broker who did get stopped out if you're using that particular broker. But again, we're still in this trade. This is a good one for some of the chat room members. I did say that, this is going to go further, most likely. Again, 3 candles. You get one strong one, a second one, and then you get a third one that's not usually as long, and it'll stall, which would bring us right up to the 50 psychological level. But I'm done. I'm flat this pair, so this is a 57-point move here on this trade, and then I'll show you some of the other trades we had at the same time. Okay, I'm gonna review and wrap up things here in the chat room. We've got just maybe another 15 minutes left. I'm gonna close early. It is Friday. Sometimes on Fridays I'll close the chat room a little bit earlier. Sometimes we'll stay in the chat room a little bit later if we're in a trade. Normally we close at, it is 8 minutes after 9 California time. So normally I close right around 10 o'clock California time, which would make it 1 p.m. New York time. So it's just a few minutes after lunch right now in New York. And again, I'm done. I'm flat everything at this point. So we had a breakout trade on gold. I had a couple of members in the chat room asked if I would review that. So I'm going to make a video later on today, maybe Saturday morning, and then I'll post that in the membership area, and I'll talk about, again, the strategy, how we get into gold, why. This, I'm going to say this first of all, that today was a great day, but we don't get great days all of the time, right? You can look at this chart, and you can see we've got, there's a lot of things going on here. It's pretty choppy here. This is the euro dollar. This is the last trade that I think I showed or that I was recording previously before I paused this and jumped back into the chat room. So again, today was a good day, but we have to wait for these good days. And when these good days happen, or as slow as it is prior to a day like today, it's the anticipation of today, right? And what it is that drove price like this and gave us these opportunities. I don't have these breakout opportunities or these reversals and things like that inside of a range like this. There's scalping opportunities and maybe very short-term limited opportunities, but that's it. And then on a day like today, I can make 176 pips calling out these trades. Obviously, there was a few others with the crosses and then the futures and gold. I didn't take any Bitcoin trades today either. I didn't call any of those, so I know somebody's always going to ask, how is Bitcoin? So, but because I do call out occasionally, not all the time, I don't focus on Bitcoin in the chat room, but when I see a good solid setup on the Bitcoin, I will call out a trade on Bitcoin. And today was one of those days where, and I say this pretty often, that it'll affect the markets for the most part across the board. This is one of those days, but we haven't had one of those days in a little while. So it's slow and it's time consuming, and people will say, when are we going to get a break? When are we going to get a break? When are we going to get a break? And, when is it going to move? When are we going to get a good, 50, 60, 100 point, 200 point day? And this was one of them. The other question was, now that this is sort of out of the way, what could we expect going down the road? I think more of the same. I think that more consolidation in certain periods of time when we're waiting for, depending on which currency we're trading, or waiting for more information. But anyway, today was one of those good days. But for those of you who are watching this video, if I post it on the YouTube channel, for people who are interested in what I do in the chat room, but don't necessarily know how it all works, I want to let you know that I don't have 100, 200 point days every day when the market provides the opportunity. And I say this all of the time. I even try to make sure that anybody who writes any text on my website, that if I say, we're going to earn 1,000 pips a month, well, we're going to earn 1,000 pips or more per month when the market provides the opportunity. Today, it provided an opportunity for us to get closer to 1,000 pips a month. Last few days, I wasn't getting, we weren't getting that close to 1,000 pips a month. You see the point. All I'm trying to make is the point that I don't, I'm not going to lie. I know a lot of other people say they're making 100 points or 50 points or 80 points every single day. It's pretty consistent. I don't get signals sometimes on these days. I don't get any trades. And if the other currency pairs are moving the same way inside of tight ranges of consolidation, I just don't get any trades and I have to wait. But by waiting, I get, 2 or 3 or 4 opportunities on a day like today or more. So this was a really good trading day. Now, I mentioned in the chat room, and I'm sure I mentioned it in this video just before I paused it here, that 50 would have been the next psychological level, and it went as high as 46. This is one of those scenarios where, and I said this in the chat room, because I know some people were holding for the next target there at 50. But I say that, if it's 3, 4 pips away, maybe even 5 pips away, and you're up 60 pips, if it's 5 pips away from your final target and it looks like it's going to stall, take it. I did say that very often with a move like this, we get one, two, and then maybe even three bullish candles, and the third one is a little bit slower. But it doesn't guarantee, just because I see that pattern repeat all the time, it doesn't guarantee that it's going to happen again. We've got to protect ourselves. Remember, we're in protection mode in this environment. This is a great day, and we got some breakouts. This was not one of them. It broke out of this range here, but this was a Tech 1 trade, and I reviewed this at the beginning of this recording here, what the setup was here as far as a Tech 1 trade. So it was not a continuation breakout trade. And again, I pointed out as well the dollar, how it was approaching this A high and stalled right there at that A high, started to curve back down using other patterns and chart indicators, other templates that I use to identify tops and bottoms. That was also my additional form of confirmation. And then switching over here to the euro dollar, this was just perfect. The only reason why I really focused in on the euro dollar is I'm pretty upset at the fact that some of the people that were using the trade copier got stopped out here. Clearly that low was 51. Clearly the low of that candle was 52.2. And it really should not have been stopped out. When you get in a situation like that, and a lot of people are sort of putting their stops down here, brokers will widen the spread here if they can and they do, but not all of them do, and you may not have experienced it before, but I've seen it and I've experienced it. And I've been trading for 19 years, and I've been using MetaTrader. I don't remember when I first started. I didn't start in the beginning of my trading career with MetaTrader. I started with FXCM's TradeStation platform. I loved that platform. Anyway, brokers can do that kind of thing. So some did not get stopped out. Chat room members did not get stopped out, but some of the trade copier members did get stopped out. And I'm sort of at the end of this whole trade copier thing, because the that's what I meant. Chat room members did not get stopped out, but trade copier members, some of them did get stopped out, and that's a broker thing, right? That's not something I can control. I set the take profit and the stop loss levels, and the take profit level for the trade copier was the 1100 area, but there's nothing I can do when a broker's going to widen the spread. And even if you move the stop, because I get that question every once in a while, would it help if we move the stop? And sometimes they'll stretch it an extra. If you only move it a pip or two, sometimes they can still tag that level. And when that happens, then you realize that you're with a broker that's manipulating price, and then you've got to decide, are you going to move your money out of that account and try to find another one? And brokers, over the last few years that this has been going on, especially MetaTrader brokers, they know that they see the pattern. They see the pattern with people. They know that they're going to lose a few people. They know that some people are just going to accept it and keep on going if they've got money in their account. And they can count on these things. They see the numbers. They've been in business long enough, especially if it's not a new company. And this has been going on for a long time. So I'm deeply concerned and sorry for trade copier members. This should have been a perfect opportunity for trade copier members to have earned at least from the entry of 70, 71 to the 0030 pips. But as I said, we were going to continue to manage this thing if it blew right through the 00. And if it goes, the next level is going to be the 20. And then in that situation, and that's a final scenario, I told everybody in the chat room I was flat at 30, which I probably would have done with the trade copier. Either that or closing it at the next psychological level, which was 20. It's not. I mean, I have to take the responsibility of it looks like a bad trade for the trade copier, but nobody lost any money and everybody made a lot of money in the chat room. So, how do I work that out? I've got to figure that out. I've got to figure out what to do next, and it's a really interesting situation to be in, because this was a really good day, and things like that just shouldn't happen. I mean, the reaction here, in my opinion, was BS. We see spikes with news like this, but with news like this, like today, and even other events that are really important, and the market's waiting, and the market has a strong reaction to, there are other times when we don't get a spike. The argument today in the chat room was that some people were saying, well, maybe it got stopped out, and some of these people got stopped out just because of how many people were actually trying to buy here at this support level, and they weren't too sure what was going on, and that this was even going to happen. So it would have been a relatively easy target, I guess, for a lot of brokers, depending on how many clients they have are at those levels, but there's not a whole lot you can do to protect yourself if they're going to cause a spike like this. So it's to be expected, but again, it wasn't stopped out, but some brokers did stop out people using the trade copier. And I really don't like that, and it shouldn't have happened. The pound dollar, as I've said for most of the day, I'm not trading the pound dollar at all. I'm not looking at the pound dollar. I didn't trade this reversal. I had a few coaching students that traded in HL30, even though I have said over the past few weeks, don't trade HL30s. I didn't call it because I don't want to trade the HL30s yet. But this HL30 actually did work for some of them, and they were pretty proud and happy with that trade. So some coaching students in the chat room used that technique that I trade and that I call out, the HL30. I did not call this one out, so I'm not taking credit for that at all. But it did work. It was there. I don't know that the next one will work, and I probably will continue to avoid using the HL30. However, I would definitely consider trading the Tech 1 trade, which was exactly this trade. This was the Tech 1 trade. So before I move on, in answer to anybody's question, if I think it's going to go up to 50 again, when we see a pullback after the last final take profit level at this point, and it just sort of stalls in between like this, if you have not locked in a few pips before the final target, when you're up 30, 40, 50 pips, I say this all the time, when you're up 20, 30, 40, 50 pips, that's a great trade. If it stalls and goes just a few pips before your target, take it. Like, get paid. I'd say this all of the time, especially in the chat room. Get paid. We've been sitting here for hours waiting for this to happen. We earn this money. Get paid. Don't hesitate, and don't get mad if it popped up another 10 pips beyond that. You did everything you were supposed to. It's taken out all of the price targets that we've traded it to. 20 was the next one. I should probably go ahead and put that in there, but I didn't have it in there because I didn't want anybody confused and not ask in the chat room when I'm trying to target a little bit more than the 20. I mentioned that I was going to hold it, and if I would not have been saying anything at that time, it's possible that some people would have looked at the 20 and just locked it in there when it hit 20, when I was in fact trying to hold longer. And I was saying that in the chat room, that I was going to hold a lot longer if it was going to pop right through these levels, which it did. So again, on the pullbacks, if you haven't closed the trade, when it comes back to the last target that we've had, that's it. At that point, I'm done. I would expect that maybe it's going to move back up a little bit higher. That's what I would expect, but it doesn't mean it's going to happen. And it could happen between now and the close. But at this point, I want to be flat everything. 176 on these three trades that I'm going to show you that I called out in the chat room, not including a couple of the crosses and then the gold trade. That's it. So I'm flat here. I'm flat. I'm not trading the pound dollar. I know some people wanted to, and again, there was an HL30 there that some students took. This was the other trade, but this was, again, another Tech 1 trade. Again, lining it up with what we saw going on here with the dollar. This was a critical level here, and it was for most of the week. You'll remember when I had that A high, B low, those of you in the chat room, when we saw this, when we set this up, everything stayed inside of that range. And then at one point, and I talked about this earlier, there was a signal candle, but no 3-pip entry. So we would not have considered selling this or going the opposite direction on the euro dollar or confirming with the dollar Swiss. Nothing like that, because it didn't go any lower. It just kind of trailed right back up. And then when it went back up, it did not take out that A high. As it was going back up, that's what I was identifying, and that's what I was pointing out. If it closes above that A high, then maybe this whole thing is going to shift. And who knows what he's going to say in Jackson Hole. But it didn't close above that. And you can see this is a 1-hour chart. 1, 2, 3 candles. This is a perfect evening star pattern. 3 candles, 3 hours. To me, in my opinion, on a 1-hour chart, 3 candles at approximately the same level, that solidifies a resistance area. It's a lot different than, like looking at just one spike high or low. This was clearly the high for the week at that point, and everything went sideways, so that made it pretty obvious. But over here, where it was running into resistance and having trouble going any higher, that made it really obvious. At the same time, though, and you know this in the chat room because I'm going through these charts just like this. So this was the this is the dollar Swiss, a 64. First target is going to be 50. That was pretty close, but that's the first target. Second target is 20, and then the final target is the 00. And when everything started to roll in our direction, again, just like we were holding onto the euro dollar, a little bit longer, waiting to see if it was going to take out certain key levels, it was easy to trade it straight to that 00. Uh, and then the other trade here, the dollar yen, and we got a lot of confirmation. This was a continuation breakout trade. We got a lot of confirmation for some of these. The dollar yen at resistance. I didn't sell it up there. It was still inside of this awkward range of consolidation that's been in place all week. This is the 1 hour time frame. There's my continuation breakout trade right there. That's my 3-pip entry. There's the first target. Remember, on the continuation breakout trades, this is one of the things that's been the most challenging for trade copier subscribers, is that they would prefer, trade copiers, the majority of them, trade copier subscribers would prefer for me to hold and get into a continuation breakout trade and use that 55 pip take profit level. That's my target every time I take a continuation breakout trade on the 4 majors. But in a market environment like the one we've been trading in the last month and a half or two, we scale out, and I recommend scaling out. In the chat room, I'm always going to scale out and say, there's my first target. I know where my entry is. It's a 3-pip entry. So when I call out this trade today, I said my entry, I'm selling dollar yen at 1.05.94. That's my entry, 3-pip entry low. First target is 20 pips. So the first target is going to be 1.05.74. The final target, which is 55 pips from the entry to the final target, is right there, 105.39. And it worked. In this instant, it worked. But with the pound dollar and a few other times that we've traded over the past couple of weeks, it's only hit the first target, moved a little bit lower, but not hit the second target, and then reversed. So when that happens, that tells me that the market's changing, right? The price structure, things I need to prepare, and I definitely need to be scaling out. Scaling out is the key to locking in some profits and not experiencing a loss. So in the chat room, we mark it up as a win if it doesn't hit the second target, because we locked in profits there at the first 20 pips. And then we set the second half of the trade at a break-even stop. And I've been trading it this way ever since. Like ever since I developed this method, I've always scaled out at these levels like this. But when the market is in a more normal moving, that flow, when you get the news and then you get the reaction and then you get some consistent movement after the breakout, when it's experiencing that more normal those normal conditions, we don't always have to scale out at the first target. Sometimes we can just hold for the final target. Anyway, regardless, trade copier people are going to go, okay, well, today it hit the 55 pip take profit. So let's go back to you holding for the 55 pip take profit. But I mentioned earlier that I think that more of the volatility and the choppy behavior that we've seen over the past few months is likely to continue, at least for maybe another month or so. Maybe not next week. Maybe next week will be a little more normal. Whatever the case is, I still think it's going to continue. So I still think we're in, safety mode. I mean, we've got to be preserving capital. We've got to be anticipating that the market's not going to move. It's going to turn around and spin around 180 degrees the opposite direction due to economic data. Tweets on Twitter. I'm sure we might get some next week. It seemed to kind of taper off a little bit, but this week. But you never know. So we're still constantly looking for or having to protect ourselves and anticipating these moments where even a comment or a rumor is going to turn price. The market's reacting to it. I still think we need to scale out. Chat room members are going to continue to scale out. I'm going to continue to scale out. I think that trade copier subscribers should accept that I should scale out. And chat room members, if they scale out, they've got 2 lots on the trade. They're scaling out at the first. They close the first lot at the first target, earning 20 pips approximately. And then they set the remaining open lot at a break-even stop. And if it continues to the second target, then they earn 55 pips. That's the way I've always done it, and that's the way chat room members do it. Anybody that uses my system hands-on, that's the way they do it. But I can't trade like that with the trade copier. I can't open 2 lots, and I can't close half of one open lot. In the United States, brokers don't allow that. I can't do that. So the trade copier is just one target. And trade copiers members are probably going to get the 20 pips, while the chat room members, because they're hands-on and they're executing it the way I say to, and the way I'm doing it, 2 lots, they're going to manage the position and they're going to make more. And there's nothing wrong with that. I understand that you want to get the same results, but it's just not possible. Technically, it's not possible for me to do that. I have to make some decisions, and one or the other is going to happen. I'm either going to hold for the 55 pip take profit level, and if it doesn't hit, then I should have, right, looking back, locked in the first 20. But then when it does hit the 55 and I only take the 20, then people go, you should have held for the 55. You get my point. So it's going to constantly go back and forth. So I have to just stick with one or the other. Um, and and it is the way it is, right? With technology, and it's a tool. The trade copier, unfortunately, it's not the same thing as hands-on trading and me speaking moment by moment. Hey, I'm locking in profits here at 74. You should do the same thing. I've just closed the first half of my position. I'm setting the second half of my position at a break-even stop. If it continues to 39, then I'll close there. And then when it reaches 39, I say it's reaching 105.39. I'm flat. I'm done. I recommend you guys do the same. If it goes a little bit lower, I don't care. I'm out of the trade. That's what I say in the chat room. And I say it over and over and over again every time we get trades like this. So, yeah, so this one here, the continuation breakout trade, this was also something, again, that we were confirming. Again, I always use Japanese yen futures because I trade Japanese yen futures. That's probably part of the reason. But again, we were watching the same thing as this setup. And before I called the trade here, noticing this is the, again, back to the dollar yen. It's been a long night, sorry. So I'm almost done here. So there's the range of consolidation, right? A retest there, another retest, a few more. And then here it stalls just about the same time the dollar did. And then just about the same time that the Japanese yen futures bottomed out right here at that support low. Same thing. And then the next candle starts picking up with momentum. And at that point, it was easy. Using this chart right here was easy enough. Because, and I say this all the time, especially in the chat room when we review this, if I have a chart that looks like this, if I'm trading futures, when I see a breakout, the first thing I'm going to do is look at volume. Then I look at Bollinger Bands. When I'm not trading and having the advantage of trading futures, and I'm just trading a currency pair, and there's just like tick volume, then obviously I can't look at true volume. I'm not going to see true volume. This is true volume. These are this is futures. So that's the reason that we go to this chart to look at this and try to gauge the strength or the weakness of the yen at that time. And it makes it relatively easy to trade the crosses, yen crosses, and the dollar yen. Exactly what we did today. So if it's a currency pair that I don't have the ability to look at futures tied to that currency pair, then I'm going to go straight to the Bollinger Bands. That's when I look at just those three indicators. But if I'm looking at a futures chart, I'm going to look at, on a breakout, I'm going to be looking at volume levels. With reversals too, I'm going to be looking at volume levels because those are keys and clues in themselves and help put together, the analysis and the decision, the final decision to make a trade, whether it's a bounce off of support or resistance or whatever the case might be. So again, this was that bounce right off of that low, and you can see that massive spike in volume, and then it continued a lot higher. So with the futures, it was a Tech 1 trade that eventually led into a continuation breakout trade, and then it continued. Sometimes you get both. Sometimes you get a Tech 1 trade at the lows off of support, and if you're trading on a chart like this where you can get more, a deeper look at what's going on and volume, because we're looking at actual volume levels, so sometimes you miss the Tech 1 trade, and then it turns into a continuation breakout trade. There's a center point, and there's that candle that closed. And then, of course, with the continuation breakout trade, you want to see more volume, and you want to see the Bollinger Bands separating away from each other, and no divergence in the CCI or the MACD, and then you just trade it. So this basically confirmed all of the strength that we saw in the dollar, in the Japanese yen, and this chart here to the downside. Again, they're going to be moving in opposite directions. So for those of you who aren't familiar with what I'm doing here, this is Japanese yen futures. This is a 1 hour time frame, and I look at and for the same setups that I use when I execute trades in the currency markets. I do the same thing with futures. Even with the gold futures today, it was the same thing. It was a breakout trade. But what I'm doing here is Japanese yen futures. It's not a currency cross pair. There's not another currency tied to this to price. And this is either Japanese yen strength when it's moving up or Japanese yen weakness when it's moving down. That's it. Futures. Right? And it's going to be moving in the opposite direction of this chart. So when I see Japanese yen strength this morning, this is what I need to expect, and this is what I trade. So the Tech 1 trade right here, I didn't really care for that Tech 1 trade, even though I saw it the same thing on the futures. So I did not get in there, and I waited for that break. And the reason was that there's my support low. This was my consolidation range. And it's been sitting here all week long. And I felt much more comfortable trading and waiting for the breakout. So sometimes I get a signal on the euro dollar, let's say, that will happen maybe before the rest of the market picks up. These trades don't all set up and fire off at the same time, giving me an entry at the same time, even on a day like today. Sometimes the euro dollar will be the first one, and not this one, but maybe the dollar Swiss an hour later, maybe at the same time, and then maybe the dollar yen an hour later, or maybe at the same time. Every time it's going to be a little bit different. But again, with this one, the dollar yen, I felt a lot more comfortable waiting for the continuation breakout trade, because if this was truly going to move the way the dollar, the Japanese yen futures were indicating, then this breakout was likely to happen, and the 55 pip take profit. So 176 with these, with just the three of these trades that I showed you. Ignore some of these indicators here. I apologize for going back and forth. This is not the chart that I use for a breakout, but I was looking at, and I used it because I wanted to identify the resistance up here and the reversal. So I start using these indicators as reversal indicators to help me find highs and lows. And even if I use it as confirmation, again, the Tech One trade will very often confirm the continuation breakout trade. When I get the continuation breakout trade, one of the first things I always say, and I say this in the chat room, where did this come from? Where did this come from? Where did we get, what was going on prior to this continuation breakout trade? Well, it was consolidation, but there's my Tech One trade. All these indicators are confirming the reversal. So if I miss that, or if I wait for a safer opportunity, I wait for the continuation breakout trade. The continuation breakout trade, in my opinion, is always going to be much more safer and much more reliable than just trading a Tech One trade and then hoping for the best. You know, it could have just remained inside of this consolidation, just bounced around a little bit more. There was no mistaking that once the breakout occurred, something was happening. There was a reevaluation of this currency pair, and I know why it was happening. And that's why I could expect it to continue to trend in the direction of the breakout to that 55 pip take profit target. Scaling out, because you never know in this market environment, but maybe in a few months from now, we won't have to worry about scaling out as much. We can hold to that final target and just take one lot, one target, something to that effect. I still recommend getting in with two lots. And again, if you trade a standard lot, just cut the standard lot in half so that you're not over, you know, if you're not, you don't want to go over your limits. I'm going to go ahead and wrap it up here and then jump into the chat room and close it now. It's 12:35 New York time, and I'm done and flat. Again, over the weekend, I'll be posting the gold trade in the membership area for coaching students in the chat room. I'll send out an email with a link to it, and then you'll have access to that. No trades on Bitcoin. I didn't trade pound dollar, but obviously I'm going to take a look at it next week to see what opportunities it gives me.